Hello, everyone. It's so nice to be here again for another edition of the Next Gen Investor. At GSA Ventures, we are doing this webinar because we want to, educate and help some aspiring investors to understand how to invest in technology and maybe also some angels, become a part of the network that we have in Ontario and Toronto for those that are interested in pre-seed startups. My name is Miriam Lazarte. I'm the GP of GSA Ventures, and it will be a pleasure for me to be here, just today, just to have this conversation here with all of you guys. And thank you so much for joining me today. So, um, today the topic is about how to evaluate early stage startups and what actually matters at pre-seed. This is a really important conversation because this is one of the most common questions that I get when people are kind of approaching to us. Uh, Most of people that know me knows that I'm also directing an accelerator. Has been 10 years working with over 340 startups, and in the last 3-4 years we get about 35 to 45 startups per year. So we have a significant amount of, number of startups that come to our place just to find out how to grow to the next stage. So evaluating startups in an early stage for investment is more, critical than ever. These days, pre-seed has been kind of in a not the best stage at all in the last 2 years. People have walked away from investing in startups at this stage, or the scarcity, is there, for what is funding for this startup. So I want to kind of address what is the situation, how you actually evaluate startups in these stages when they're so early that you don't have enough data or you don't have enough information for you to evaluate completely, how to de-risk the startup. So first of all, at pre-seed, there is a very little data, no strong revenue, no clear outcome yet. So you do have to evaluate the company almost when everything is uncertain. I'll share the approach that we have at GSA Ventures. Maybe if you are already an investor and maybe you are already putting some checks, you can tell me maybe this is something that you think is happening also with you, or maybe you have a different approach to evaluate investors. And if you are new, well, you can also let me know in the comments in LinkedIn if this is something that resonates with your take. So first thing to understand is that at pre-seed you are not having investing. You are not investing in performance. You are investing in potential, but it's not like random potential. You are looking for signals that something can work under the right conditions. Most new investors make one mistake. They evaluate the startups as they were in late stages companies, and they look for traction. And traction can mean many things. I think I have a couple of webinars also with Alejandro, and possibly in the future we are going to have webinars with some of the investors that we have in our network, so they can, have also their opinion on this. But traction sometimes doesn't look like you want to look, right? It has a different meaning depending of the investor. But I will say that you need to switch the lens here, how you evaluate the startup with, certain amount of traction in different lens. Here are the 4 things that I pay attention when evaluating early startups. Uh, First is the clarity of the founder. Can the founder explain what is the problem that they are solving? Who cares about it, and why now? If it's not clear, then everything else can be really weak. And I know probably many people have heard about this is the problem. People have to explain the problem. But the problem comes up as the opportunity for the investor. Is the business opportunity behind, and who cares about it is the customers. And why now is this is the right moment to launch a company or a solution in this specific area, because I've seen also startups when they try to launch something and it's not the right time, and the solution looks perfect, but unfortunately people are not willing, or it's not the right time for people to adopt the solution. It could be too early, it could be too late too. So founder clarity, extremely important. That's the first thing. Second thing is the real problem. It's not a nice to have. We always talk about, being the painkiller, not a vitamin. So what you want to see is urgency from the market, evidence that somebody is already trying to solve it, and even small signals matter, like early users, conversations with customers, and pilots. This is many times when we at GSA Ventures are actually looking into, okay, who is actually in the room, trying to acquire or pay for the service or use the service that the startup has at the moment, and we want to see some traction. This is why sometimes startups don't get like a straightforward answer at the beginning. You're getting our check. Sometimes investors want to wait a little bit to see whether the traction is going into the right direction. So piloting, conversations with customers and early users. The third part that is really important to have is execution. At pre-seed, traction is limited, so you look at behavior. Are they consistent? Are they learning fast? Are they making progress with limited sources? Execution is not just about skill at that moment, it's about movement. So if things are, moving into the right direction again, that's why waiting a little bit to see whether things are going in the right direction is important. And if you start up, I know what you're going to say. Hey, but waiting can kill my company. I need the money right now. But that's why you need customers. You need to validate that. It's not the case for all the companies, because also you have this situation when you are in clean tech or you are in certain technologies. Medical devices, for example, is one of those situations when we see that the companies cannot have customers without an initial investment. So it depends really on the sector. What I'm saying here is like a more broad statement, but there are, of course, some circumstances when people have to receive the funding before all this happen. It depends what type of investor are you, in which sector are you interested, and then whether you are trusting that the signs that the startup is giving you are the correct signs. Now the fourth part is the structure and readiness. This is often ignored. Many startups are not ready to take the investment even if the idea is good. And I'm going to do a very short video that I'm going to publish today in my Instagram about that, because I just passed through some networking opportunities with startups. It was a speed networking opportunity. And, I got some experience in there that I think is worth it to share with the startups. But this is for the investors' perspective. So talking about structure and readiness, things that you like to see: cap table clarity, financial assumptions, what is that is coming in the future, understanding how much they need and why. Put structure increase risk for you, and risk more than a weak idea. This is so fundamental. And in the last 2 years that I've been working with my hat as an investor, this became kind of like the really, really bottom line when we decide to invest or not in a company. So again, for the startups, I will have a different type of video. For investors, you need really to understand this part. The cap table is super important to be super clear and clean. Financial assumptions, and as well the legal perspective of the company, how they are prepared to actually receive money. So, how to find good startups? This is the second part of the conversation. How you actually find good startups at pre-seed level is not about the deal flow in the platforms. So good startups are usually in communities, in programs, in early stage ecosystems. This is why invest in companies that come through our own programs make sense for us, not because others are bad, but just because we can observe over the time whether how they are thinking, how they react to feedback, how they execute, and how they go through different good and bad times. In particular, you're betting a lot of your faith in the founder, or the team. The CEO plays the most significant role here to understand how people are conceiving, investment. But really, managing a company is so difficult. Just a founder knows how difficult it is to manage a company. And I'm saying this because I have a high empathy for the startups, because I own companies. I used to own companies. For people that know me, knows that I've been owning companies um, since many many years in the past, and I have also broken companies. So I kind of understand what the startups are trying to do here. Having the right personality from the CEO, the right person there, is super important for an investor. And right now, for me, being an investor is more than ever super clear that this role is important. And know that, of course, the CEO role is important, but what I'm saying is that is the right person to take the job and execute the milestones going forward. So the red flags to watch. Quickly, I'm going to mention a few red flags. Again, this is kind of high level, but founder cannot explain the business in a simple way. I know many times this is kind of like, oh my God, it's so difficult sometimes to explain. There are certain things that are very complex. And sometimes it's not like a lack of capacity from the founder, but a lack of communication skills. That happens very often, but the founder has to find a way to clear communicate with investor, how the company works. No clear customer. When everybody is your customer, again, red flag. We cannot just bet on anyone, or maybe it's a super super uber niche that is perhaps not scalable. Everything depends on the future, on future assumptions, and the startup has not validated those assumptions just yet. So, wait until things are validated a little bit further. No understanding how funding will be used. This is another super common one that we have seen many times between startups. They kind of want to use some funding. Sometimes they don't know like where or how to place the money exactly. And the most important part is how that money is going to make the company grow. Like showing that is very difficult sometimes for startups. I've seen it many times. They cannot explain what is going to be the next stage of the company, or how the money is going to do a significant difference for the company. So over focus on valuation instead of building. Oh my goodness, that's I will need several hours to to kind of go through here and mention, the focus of valuation in some startups. Unfortunately, it happens very, very often. And okay, so these are the most common and easy to miss if you're new. And I'm just sharing here, just a few days ago, I mentioned that it was at this networking session that I was having with some of the startups, and one of the startups got really offended because I told him that he was not investable. In my point of view as a venture capital, I mean, somebody can differ from my opinion for sure. Don't know everything, but it was clear to me that the company didn't have the structure, and it was because I was able to kind of answer my questions based on the red flags that I just passed to you. And this is very easy when you enter in a conversation with somebody to figure out that they are still kind of work in progress and they haven't figured out many things, which is a red flag for me to continue the conversation. So what most investors get wrong when they are kind of like entering into investment with startups in pre-seed, and again, all this is based on experience of working with investors and startups in the past 10 years, and the last 2 years working very, very close with some other investors. So most aspiring investors, they focus too much on the idea. So they are excited about the idea, but they don't understand the execution or the structure or the legal. Sometimes they oversee some of the big red flags that are necessary for you to put the dollars in the company. So too much focus on the idea is problematic. Ignore structure, overestimate early traction, don't spend enough time observing the funders. This is another one. That's why kind of I understand the speed networking situation. We are doing that at Tech Builders. Many other events do it as well. But again, this is kind of like dating. You don't go and marry the person next day you meet them, right? So it's necessary to spend some time with the founder, understand how the founder is reacting to different situations, and not just assuming that the founder is good because paper looks good. This is an important human factor that goes beyond the data. So if you're interested, go deeper into this particular topic and about how to structure your portfolio, how valuation works, how deal structuring works, then you should be coming to our Launch and Learn. This is an opportunity that we have for different type of people that want to become investors, or they already investing and they probably have all these doubts. The thing here is not for me to tell, hey, just come and be a part of GSA Ventures. That's not the reason here behind. It's more to share with you what has been the experience. And people sometimes don't understand, but the investment community is very small. Even if you are not a part of GSA Ventures, even if you are just learning at this point, co-investing with other investors is so important. Pre-seed for me, again, I probably say this too many times. Pre-seed is the most important round for me, and I feel like if you are not kind of like putting yourself in with other investors to put checks, then we are not going to have enough pre-seed startups to get an alpha later on. That's the situation here. So that's why for me it's important to raise a new wave of investors, people that want to understand this better. So through the launch, we go into have real examples where you will see how we work with the startups and what is the outcome of that, how you break down company step by step, how to make the first investment decisions. And normally we will go ahead and have some webinars with people after that. It's like 1 or 2 webinars that are kind of complementary to the launch. This is just to go deeper in what is valuation and exit strategies, because this is the other thing, is that sometimes people are not necessarily understanding that there is more than one or two exit strategies. Of course, there are more. So for those that are interested in on this, I will put in the comments in LinkedIn the link of our Launch and Learn. This is all happening during Toronto Tech Week. So you can join us in person. Global Startups is hosting 3 events, as far as two events, and GSA Ventures 1 event. So we are going to be super active during Toronto Tech Week. I know everyone in Toronto will be kind of doing something in the middle. So if you want to step by our office, we are just 1 block from the CN Tower, in the same building as 111 in OCI. So just come up, and if you want to learn more about being an aspiring investor and how to invest in tech and in pre-seed, please just talk with me or my partner, Alejandro Vivanco. I hope this information about how to spot on pre-seed startups and how to early stage evaluate those will be useful. This webinar is going to be available in LinkedIn and as well in our YouTube channel. So I want to thank everyone for being here today, and any questions or comments, please place it in LinkedIn and I'll be more than happy to answer them. Thank you and have a wonderful day.